Session of the day. We have two speakers, of whom one shouldn't be a stranger to many of us who moved to the land down under. Mudit GUPTA. Mudit is currently specializing in data analytics and risk management in Deloitte. His associate, called MAKRIS, is currently working in Swiss Re Corporate Solutions, specializing in PNC reserving in the APAC region. They will be speaking with us today about the truth and how some information seen can be interpreted differently across stakeholders. Mudit?
Yes, I'm just sharing my screen. Sure. Over to you, Con. Okay.
Yep.
Thank you.
Thank you.
Thank you, Velda. Thanks, Mudit. Okay, so our topic has been called "What is the Truth?" And I guess what I'll do is I'll just set up a scene for you. It may be something you're familiar with. So you've been asked to do a piece of analysis, some work, some investigation, and you've gone away, you've done that piece of work, and you're ready to present your findings. It may be quite technical in nature, and so as you want to ease your audience into your presentation, you might give them some background information. And that background information is generally available, what you'd consider common knowledge, and doesn't require any judgment or anything whatsoever. And as you're providing that information, it's part of your background for your introduction, you suddenly realize that your audience, they start having quizzical looks, or maybe they might even start murmuring to themselves. And then suddenly someone says to you, well, actually, what you've said so far is wrong. That's not how things work at all. So before you've even got into your presentation or your reporting on your technical work, you've completely been derailed because of a starting, or one of the foundations of your work has been challenged, even though it shouldn't be controversial at all, and everything gets completely derailed. And so that is why we want to, and the reason that's happening is because their version of the truth is different to yours, at least your starting point. And so our question is, what is the truth? Next. So as an example, we've got a very simple renewal rate calculation here. So we have a group of policies which have a premium in year one, and we also have the premium in year two. And so there are, several ways you can calculate the renewal. So the first way is you just do a policy count. You see, well, okay, these are all the policies that were there in year one, and here are the ones that got renewed in year two, and you come up with a number. But that's not the only way. The other way is you could say, well, what was the actual premium amount that got renewed versus what was written in the year before? And you've come up with a different answer again. And you can get to a third approach, which is you say, well, actually, that year two premium, it includes a few other things in there. So if you want to be more like for like, you just compare the year one premium that gets renewed. And once again, you come up with a different answer. And then you might say, well, maybe I do want to include the year two premium, but we want to we want to back out that rate increase because that will artificially inflate things. So we've got 4 measures here, and you could do even more, but these are just the starting measures. So automatically, our renewal rate is somewhere between 67 and 99%, depending on how you look at it. So let's say you go and present these results, and you suddenly start getting all these questions. So first up, is someone says, oh, this policy here that's only 300 in year two, well, that's being paid in installments. You don't have the full renewal. So, that number's wrong. That needs to be changed. And you might get someone else come along and say, oh, well, this policy here is actually, it was a 1-year contract. Now it's a 3-year contract. So, we should get credit for that because we did a really big renewal there. And then you might even get other questions like, oh, that policy that didn't get renewed, we intentionally decided not to renew that because maybe there was some sort of business or strategic decision that said, we don't want this policy anymore. So we shouldn't be measured on things that we purposely aren't trying to renew. And another example might be, this policy here is they say, Well, that's part of a package deal. That's got nothing to do with us, our part of the business. Someone else is responsible for that. That gets lumped in with our numbers for whatever reasons, but it's got nothing to do with us. So they want that one excluded as well. And you could get other things too. So for example, this policy down here, they say, well, you know what, it was you don't see the premium in year 0, but it was the reason you don't see it in year 1 is because it was from year 0 and it was renewed 2 years later. So we should get credit for that one as well. And the final thing that people might say is, we managed to get all these rate movements, we managed to get all these renewals done in an environment with increasing rates. Therefore, that should be factored in as well using some sort of a price elasticity allowance. So we had originally 4 different methods, 4 different results, and you could adjust them, any of those, based on any of these following points you've got. Yep. So go to the next slide. Thanks, Mudit. So I guess the question would be, how many of those things would you allow for if you knew about them, if at all? And so to help us look at this, we say in the middle of this slide here, we've got our actuarial data or data. So this is what we would get easily have access to. And that would be our first go-to source of information whenever we were doing an analysis or investigation. But of course, it's not the only source of information. The most general or the simplest building block of information is the policy wording on a policy. So it's very granular, it's very specific and very detailed, but probably wouldn't be entirely useful for what we would do as actuaries. Next up, we have what we would call either a sales system or an underwriting system. So this would contain information about the client as well as the risk. And so it might have things that, what are we trying to, what business are we pitching? What are we trying to win? So it doesn't just include things that get written, but also other items like, say, it might even include some sort of sales strategy or those sorts of targets. And you may even have client scores and client ratings and things like that. Then you've got your policy administration system. So once the policy has been written, it usually ends up on some sort of policy administration system. And this will have summarized financial information, and it will tell you what kind of a policy it is. But if there's anything bespoke about that policy, then it might appear here in some form or other, but it won't be as detailed as, say, the policy wording. Next up, we have the financial landscape. So this would be the basically your balance sheets or your P&Ls, that sort of things, and that would mainly focus on the financial information and less so on exposure or other items that that the actuaries would calculate. Other sources can include KPI and internal monitoring. And so this can be quite varied because different KPIs will apply to different segments of the business and different functions. And we also have external monitoring as well. So that will be things like the regulatory or other. Next slide, Mudit. So there will be the regulatory or even just some sort of industry bodies you may be part of, or if you're a listed company, then that will include things that go into the financial markets or so that go to these stock analysts and things like that. So there are all these different sources of information, and as the actuary, we've put in the middle, the question would be, how much of this do you have access to, I guess, firstly, on a regular basis? And if you needed to get some of this other stuff, could you get it easily and in a reliable form that you could use practically? So that's just something to keep in mind. If we move over to the next slide, I've got an example here of what one of the regulators has said. I won't read the whole thing, but what I'll do is I'll just give you the gist of it. Most regulators, they will ask you to comment on the quality of your data and its appropriateness for use in your, for example, reserving. But we found that Lebuan FSA is one regulator where they actually point out that the actuary should have unrestricted access to any data that they require, and that management shall furnish it immediately upon request. So from that last slide that I showed you, that you would basically be able to grab anything you needed that you would require in order to perform your in this case, valuation of liabilities for general insurance. And so this is the only one we've seen in the Asia region that has something like that. But to come back to I guess the introductory question of the presentation of what is the truth. So you have your view of the truth, all your different stakeholders sitting around the circle have their version of the truth. And ultimately the truth depends on where you are standing.
Yeah, so thanks, Con, for the introduction to our topic. So I wanted to talk about potential, how could actuaries champion the solution to these sort of challenges that we face in our organizations. So before I jump into it, I wanted to know, get a sense from the audience. It's always hard with a online conference. So Maylin, would you mind just putting the poll question up, please?
Yep, it's up.
Oh, okay. So I can't see that, so I'll rely on Quan and others to just let me know when it's done.
Yep, I'll just give it a minute or two and then I'll close the poll so we can see the results.
Mm-hmm. So
Right.
essentially,
Sorry. Just want to say we are about 43%.
okay. Look, so essentially what I wanted to ask the audience to reflect on is your level of comfort in your organization's data. Now, it's a very broad question. Everyone has their own perspective, but that's okay. Just want to get your feelings about it. Great, thanks for that. So I can see the results now coming through. So, okay, look, it's actually quite evenly distributed. I mean, if I look at it, the positive and negative aspects of the data. So that's actually quite interesting to see. So about 40% or so assess their data as. I'm hoping everyone else can see the results as well. So, but roughly about 40% of the members mentioned that it's relatively poor, and the remaining it's either improving or fairly good, and about 18% said it's actually on the very positive end. So great, thank you for that. Well done, Million. So I'll just continue on the presentation. So Deloitte did a survey of a similar survey to insurers in Europe, Middle East, and Africa, and the results are as shown here. Now it's really interesting. We sort of saw a normal distribution shape of responses. So, well, 40% is actually exactly the same in the poor responses. Interestingly, the responses from this conference reflecting potentially of the Singapore situation, a bit more on the middle part than on the right-hand side. So, look, I mean, it's similar, but it's different, let's say. Now, I do want to come to more specific question about the actuary's involvement in your involvement or in the company's data process. Malin, would you mind putting the next question up, please? There we go. So the first question is around how well do you know the source of your data? So again, it's a very general question. Just interpret it best on your own involvement in your company. The second question is about your involvement. So how much influence or oversight do you have on your company's data process? And the third question is more aspirational. As actuaries, as professionals, how much influence and oversight should we have in these data processes? Well, I'll take your lead for when to stop that.
I'll wait till it's about 40%
Sure.
response rate.
Yeah.
Currently at 33%.
Good. And you can interpret data in any way you like, whether it's actuarial data or anything.
Okay, I'll end the poll now.
Sure, thank you. There we go. So again, I'm hoping everyone can see the results. If not, I'll talk through it. But so essentially, the first question: how well do you know the source of your data? A clear majority mentioned that they know these systems or where it came from, and sort of equally distributed in other responses. On influence and oversight, now this is really interesting. Roughly about 40% of attendees mentioned little or negligible influence or oversight on data processes. Does it surprise anyone? And finally, how much should we have? So I see two very clear responses. So to the extent necessary for actuarial work, fair enough. And there's the other one, we should have a key influencer role. So this is really interesting, actually, the last two question responses. Those that said to extent of necessary for actuarial work, kind of evenly split between we should have a key influencer role. And if you look at the reality, it's not there right now. Yeah. Let's keep moving, and I'll come to potential ways that I want to encourage the members to think about getting more influence. So this is building nicely to where I want to get to. Is the solutions. How the problem that Con described, the survey that we just looked at. How can we get more influence? How could we solve these data trust problems? And we know there are some. 40% of you guys did mention those. So what could we do? I'm going to talk about two themes of solutions. So one is looking at corporate company level solutions. So things that an organization needs to champion at the leadership level. They require investment, they require executive support. And I'm going to talk about individual level actions that individually, as actuarial teams, as actuaries, as professionals, what we could influence directly, immediately. So, and since I came back from Singapore to Sydney, that's kind of an area where I've been working in a lot in automation and AI space, in insurance and other industries, and it's a very common theme of challenges, and it's a very generic set of solutions I'm going to share. But really, each problem's different, and just think of these as ideas that may be of help to you. So let me start with company level actions, and the number one thing I'm going to talk about is data governance. So the trust issues ultimately come in the category of topic of data governance. So what does it mean? And I'll come to what it means, but let me just talk about the theme itself. So have you been involved in conversations on data governance in your companies? If you have, great. And there may be opportunities to review design and operating effectiveness of the data governance frameworks at your company. Now, what does it mean? What does this keyword governance mean? In the topic that we're talking about, it means four things. First is the processes that enable governance. So things like policies, standards, procedures that exist in your firm to deal with data quality, data trust, data security, etc. Are these fit for purpose as new data sources, speed, more details about customers change? So do these policies and processes to keep up with those. The second thing is ownership and accountability. Is there ownership and accountability for data across the organization? And what I mean by that is, are the right senior execs responsible to enable teams to ensure data quality is entered correctly in the systems? Are the right people empowered to make sure things don't get stolen? Are the data entry staff empowered and encouraged to enter data correctly in the first place? So things like that. The third pillar is around technology and capabilities. So, these days everything's digital. So are the right tools in place to manage security, to manage data integrity, to manage metadata, and are these fit for purpose as the nature and complexity of data is evolving over time? And related to that is capability. Are the right people available to look at these things? Over time, new tools and new technologies come, and the training and skills of staff changes too. Often these are, bucketed as IT, but they are just one component of the data value chain. And finally, data catalog. So you got to know what's there to use it, and is there a way for end users to access the right data? How is it being done right now? How is metadata, which is data about data, being managed presently? Is it fit for purpose? So these are the kind of questions to think about, and if you feel that there are gaps in certain areas, there could be opportunities to influence and engage in those conversations. Now, that's some ideas around corporate level actions. Let me now come to more at the actuarial space and potentially individual space. What could we do directly? So number one thing I want to say, and this aligns very nicely with some of the responses you all shared. I do see aspiration and need for more influence of actuaries in organizations, and clearly being the experts in an insurance industry, we have a central role in data generally. So a couple of ideas that you may consider useful. So develop reconciliations for explaining differences between two sources. So Con earlier gave an example of renewal rates with different perspectives. So different departments look at things from different perspectives, and that's normal, that's fair enough. Now we are in a unique position to help bridge those gaps. So for example, when Con shared an 80% renewal rate and 99% renewal rates, they're both correct. They just need to be explained by differences in premiums and differences in rate movements. And we are in a privileged position, unlike many others in the insurance industries, to be able to bridge those gaps. A couple of other thoughts are thinking about how strong is the collaboration between technical staff and business users in your company. Like I said, many other departments and professions in insurance work in their own silos, and actuaries are in a very unique position to bridge those gaps. So I definitely think that actuaries should have influence and oversight, particularly when data is involved or when new data assets are being developed. So get involved. And that means putting your hand up beyond, you know, if you're responsible for statutory work, you know, I think I would encourage our profession to be involved broader than that. We have great knowledge and understanding of many nuts and bolts of the insurance value chain. We can enable projects to use the right data, the relevant data, you know, for our companies to remain cutting edge. Now, the pitfall obviously is if you become the source of truth, you'll probably inherit a lot of reports and things for your company. But you know, that's a balance that, you know, as leaders we'll just have to manage. Finally, it's important for organization to know what data is available and how to gain access to it. Two practical examples could be to help create a data catalog, which I touched on earlier, and to help identify data scouts. Or what I mean by that is champions who may not necessarily be actuaries, but who may be people with aptitude and interest to champion like-minded things for, you know, data, so things happen in the right way for other departments. So they could be the catalyst for change that, you know, potentially you train up. So, and that way, you know, you can't do everything yourself. You could empower other champions in your organizations to be the scouts for you. Con?
Yep. Thanks, Mudit. So I guess to sum up, I guess what we'd like to say is that as actuaries, we are the judgment experts in the company. And as such, that in order for our views to be heard and to be, I guess, accepted, it's important that we speak the language of the business and understand their point of view. Okay, thank you.
Thank you. Thank you, Con. Thank you, Mudit, for the presentation of data and how we should be influencers of the data that we have. A question for me actually. Do you think the GDPR or the data protection would it make it harder for us to actually have more influence of the data available?
So that's that's a really good question. I don't think it's going to make it harder for data to become available. Actually, I'm a huge supporter of the European legislation, by the way. It's very much in line with, you know, the governance and protections that I've been championing. So it will make it harder for misusing that data and make it harder for you know, poor customer outcomes by misuse of that data. So I think you know, yes, there will be more legal hurdles to collect unnecessary data or collect something that might be, you know, breach of privacy. But I think overall, it's something that, you know, most other jurisdictions should be thinking about as well. I mean, that's just my controversial statement right there. But yeah, I think it's quite a good champion for protecting consumers from poor data outcomes.
Okay. Okay, another question from the audience. It says that it reminded, like your talk reminded him of the phrase, the more you know, the more you realize, the less you know. How can you teach actuaries to dive down deeper in their knowledge? How can actuaries insert themselves outside traditional actuarial roles?
I think it's a bit easier in some roles or organizations than others. So for example, if you work in a large organization, you may be very specialized in a particular segment or just doing one thing. Whereas if you're in a smaller organization, you may have to do a bit of everything. And so you do have to, talk to different people in different areas and find their point of view. But I guess from my point of view, you just got to be out there communicating with the other people and just trying to understand where they're coming from and their point of view. Because when you get asked, say, a question, for example, there's usually something behind it as to what's driving their I guess, their interest in the topic. So it's just, I guess another thing you can do is you can, rotate roles, change roles, maybe work in different teams, as a secondment or something, or just as an interim type position, and just learn more from doing that.
Yeah, and just I completely agree. And just by the way, if you're interested in data type stuff, attend the data day tomorrow, which will give you more ideas.
Yeah. Do you think actuaries currently focus enough on the foundational question, or whether we should be using certain data sources, particularly new ones, and which weighting factors is ethical to use?
Yeah. Well, well done on thinking about that question. Interestingly, this question, actually, this is an area of work that I've been doing in Australia, and it's an emerging conversation in Europe, America, and other countries. As far as I know, in Singapore, the regulations are quite relaxed in protecting, attributes that companies could use, at least in the insurance industry, for rating and underwriting. Now, in US, there's some very clear legislation about discriminating, on what sort of things you could price on. It's an emerging conversation in Europe, for example. Should elderly people who don't switch around, is it fair to increase their premiums over time? And similarly, in Australia with AI, artificial intelligence, that's going on as well. So look, I think it is our responsibility to think about these things. Now, however, different cultures, different legislation, different regionals, community expectations are different. So the Institute of Actuaries of Australia recently released a professional guidance material on exactly this topic. So I would encourage you to Google that. It's called an information note on automated decision making, which touches on our responsibilities as actuaries to deal with ethical questions. It's not become, a lot of front focus for actuaries right now, but I'm sure as regulation catches up, it will become more and more prominent.
Okay, thank you. I guess the next question would be, one big challenge with data governance across the organization is pertaining to the adoption rates within the various sub-teams, and they might not be interested to take up new responsibilities. That is, there will be a lot of hurdles to overcome. Improving data governance is more long-term in nature. However, business cases usually prioritize short-term goals. It's very demoralizing. What suggestions would you have to overcome this?
Let me share my thoughts, and Con, feel free to add. I completely agree. And look, it is, you can think of it as demoralizing, yes, but it is also, as an organization, every company is trying to balance, whether do they deploy their capital, right? So it's a cost benefit thing they're doing. Now, I do think if data is a priority, certainly tech companies, data is the number one focus of their investment. Now, what I would suggest, if let's say you have enough remit, you could start demonstrating that these good practices work in your own area of remit, and then others will start catching on. That could be a great way to start, or just look at the suggestions that we shared earlier.
Yeah, I think what I'd add to that is you can always add. So yeah, I think having data as a project on its own, it's usually won't get very far. But if you tie it in with other projects, then it gets a lot more traction. So, for example, if you think of data as infrastructure, anything you want to do, if that infrastructure is in place, it'll make that project a lot easier. So you kind of have to tie it in with any other project that's happening throughout the organization.
Definitely tricky, especially when data is now in the limelight. And it's interesting how that the polls does show that we have very little influence of it, and that we actually think that we should be more responsible. So yeah, it's a tricky situation to actually create those kind of like data, you guys mentioned the catalog, or like to actually push for ownership and accountability of the data itself. Hopefully, in the insurance industry, will actually take up more technological advancements that will help in terms of like the data um, that we can actually have. But it also brings about the ethical issues as well, like you guys talked about. So thank you both, Con and Mudit. Thank you very much for the interesting sessions. If there's nothing else to add from you guys, we'll close for this morning session.